Most people don't know where to turn when it comes to understanding price action. So if you're here right now, this video is going to save you guys probably hours worth of research, and I'm going to give it to you all in just one video. Welcome back to another video, guys. Here today, learning with Vel. Be sure to like, subscribe. You know the vibes. It's lit side. Now, today I'm going to give you guys a breakdown on price action. And one of the most famous quotes I could ever requote is, you don't have to be great to get started, but you have to get started to be great. So let's get into this video. Now, price action. This is something that is always moving and it's always telling a different story. Now, there's a few things price action does. In fact, there's only three things price action does. It either goes up, it goes down, or it goes sideways. It's only those three things that's always going to happen. Up, down, sideways, okay? Up, down, left, right, just like a PlayStation controller pad. So with that being said, we're going to figure out together, what does it look like if price is going up? Now, if price action is going up, this is when we create a series of higher highs and higher lows. So to draw these out on the chart, so you can see right now we have a higher high, higher low, higher high, higher low, higher high, higher low, higher high. Now, very interestingly, when we get to this point here on the charts, okay, what will happen is we can come down here, but we can see if we mark out this low as being the higher low, we now need to see another higher high. So this next high needs to be higher than the previous higher high. And in this case, this next high right here is not higher than the previous higher high. So for that reason, what we do is we come down to this low here, okay? And then we come up to this high here. Why? Because this high is higher than the previous high. So we mark this as the higher high, this is the higher low, and then of course we keep extending, going to the higher high. Now, essentially, we've got a higher low down here, then a higher high. You can see here how this drawing goes on for quite a bit, but what's most important to understand about this is if price is going up, it will create higher highs and higher lows. The second price stops making a higher high or a higher low, this is an indication for a market pattern about to change. So we've now discovered what higher highs and higher lows are. They're bullish trends. We now want to have a look at what happens when the market is going sideways. Now, when the market is going sideways, it will often look like this. Okay, you will get, okay, what we call a range, which is very simply when price is coming down and when price is going up. So it's pretty much going sideways because it's not actually doing anything. Okay, whether it's coming up, down, left, right, it's still inside of the same range. Okay, so we call this consolidation. Consolidation is one of the most boringest formations that take place in the market. So it's very important that when you see this, you need to understand that actually this is an indication that the market is about to change. Now, I want you to think of a conveyor belt. I want you to think of your favorite food item in the manufacturing warehouse, okay? Or your favorite electronic item. It goes through the stages of being the base. They add a layer to it, they add another layer, and before you know it, the item is complete, right? When it's on a conveyor belt, the first, let's say there's 3 stages, okay? With there being 3 stages to your item being complete, I want you to understand that the consolidation is an indication of us seeing the conveyor belt at number 3. Meaning, once the market has finished its cycle of being bullish in this case, once it starts to go into consolidation, that's because one cycle has been complete. It's now refreshing to go into another one. Now, the other cycle could be another bullish schematic. It could be a bearish schematic. But essentially, when we see consolidation, we need to have an understanding that this is telling us that the market is now recycling. It's about to change its shift. The market has now finished its previous shift and now it's starting a new one. So once it's starting a new one, we need to pay attention to what's going to happen. In order for us to pay attention, we need to have a look at first highlighting the range, and we can highlight this range by having a base and by having, of course, a roof. Now, in retail terms, guys, we call this support, okay? I'm going to make this larger for you guys. And in retail terms, again, we would call this at the top resistance, okay? We have support and resistance. Resistance meaning that it's the roof, and support meaning that it's the floor. Okay, if you bounce a tennis ball on the floor, it's going to bounce off the floor and go up. If you whack a tennis ball up at the ceiling, it's going to come back down, right? So we've got the resistance and the support. Now, once we see price breaking out of this resistance, of this support zone, okay, support and resistance zone, which is concluding to consolidation, okay, or a range. Once we see price breaking out of this, this is what we call a breakout. Now, a breakout is simply when price closes above the zone and retests that zone. Now, what retail traders are taught is that when price breaks out of the zone and retests back inside the zone, it will continue going in the direction that it originally broke out to. So in this case, we see price breaks out to the upside, comes back down in the inside, and then pushes back up again. Okay, that is what we call a breakout. Some people only trade like that. They only trade by looking for the breakout. So now that we've said that, I want to show you, okay, a few things. And these are some of the tricks that you guys will probably never see, because a lot of traders are greedy when it comes to the real information that can help them. So I'm going to show you some of the shapes that appear in the market all the time. Okay. These shapes, oh, I've drawn that one twice. These shapes will appear all the time. Okay, we've got a VMW, not BMW, guys, VMW, okay? And we've got a forwards N and a backwards N. Now, why I'm showing you this is because if we have a look on the charts, we can see, guys, that no matter what time frame we're on, we can always see these shapes being formed. So here, if we look at it, down, up, that's a W. If we look here, down, up, that's a V. We can look inside of here, we can see an M, up, down. Over here, we can see up, down, that's a V. If I show you an N, we can see an N here as well, up, down, up. We see a backwards N, down, ooh, down, up, down, okay? So we can see these shapes taking place always across any time frames at any time point, okay? We always see these shapes occurring. So why I'm showing you this is because these shapes all share something in common, okay? They all share. Pause this video, take a second just to figure out what they all have in common, okay? Now, what they all have in common is that they all create resistance, okay? In retail terms, they all create resistance. Now, for the most part, majority of these create support as well, but of course the V doesn't, because the V doesn't have multiple points at the bottom. So we can see here that they all have a support apart from the V, but they all do have resistance. Now, in the next episode, I'm going to go into a bit more detail about resistance, more so to the point about liquidity. But for now, we're going to I want you guys to stay tuned on the matter at hand here. And that is just that each shape can take place inside of our consolidation zone. So when we look inside of this zone here, we can see, if we really look close, okay, we can see a N shape here, up, down, up. We can see in here, if we go up, down, up, okay. Again here, a V, down, up. We can look here for an M, up, down. What else? What other the shapes? W, we can see a W here, down, up, down, up. So we see all the shapes we're looking for, guys, okay? Now, we've discovered what the shapes are, how frequently shapes are occurring. Now let's look at a downtrend. Okay, a downtrend would consist of lower lows. We see here lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Okay, we can see what a downtrend consists of, and we can see what an uptrend consists of, and then we can also see what the support consists of. So we know now, especially when we're looking at downtrends, guys, the lower low is going to indicate that price is continuously being bearish. The second we stop getting a lower low printed, then we can have a solid understanding that price is about to go the other way. Now, to show you an example, is this candle right over here, okay? This candle here is not lower than this previous lower low. And for that reason, that reason is enough to give us an indication that price can now potentially make a new high. Why? Because we've stopped making lower lows. It's an indication that the market potentially is prepared to shift. And that's what we see happening, okay? We see price pushing up, which takes out the previous lower high. So that is today's lesson, guys. It's a quick market wrap up on price action. I think for you guys, price action should be something very first and foremost that is important to learn. Once you learn price action, you can then start to understand and implement other indicators and stuff like that into your strategies. But keep your charts plain. A blank canvas will take you a long way, okay? I trade personally from a blank canvas. I don't add any indicators to my screens. And I think it's important when you're trying to figure out the markets, you know, regardless of you relying on an indicator or prior to you relying on indicators or prior to you even hearing about indicators, the first thing you should be figuring out is the candlesticks. And you've also got the candlestick formation. Now, I'll give you guys a great recommendation. It's the Candlestick Bible. Be sure to purchase that book on the e-store, because that book is going to give you guys every detail of what certain candles mean. For example, when we see these candles here, 1, 2, 3, this is a bearish reversal formation. In here, we have a bullish reversal formation. So, you know, it's important to understand here again, bearish reversal, okay? It's important to understand what candlestick formations look like, because once we see them, we can actually have a better understanding in terms of our bias being formed. So that is it, guys, for today. I hope you guys found this video beneficial. Be sure to comment below and let me know what you would like on the next one. But I'll be here to give you guys as many tips as possible and to make sure you guys are learning the right way. Thank you very much. Always remember, guys, like, subscribe, you know the vibes. It's lit side. I'll see you next time.